Obviously, the three markets are quite different, right? Different in the sense of population size. For example, right? Singapore 5 over million, Thailand 70 million, Vietnam is close to about 100 million, right? So population size is different, as well as the history and the depth of the insurance market as well. So for Prudential, we have been in Singapore for a very long time. So we have been in Singapore for more than 90 over years. But in Thailand, we are now coming to almost 30 years, and in Vietnam, 20 over years. So the heritage, the history is of different depth in these markets for us. And at the same time, the development of the overall insurance industry and the regulations as well. So even though these are all the differences in the markets, I also see commonality in the three markets, right? And it also maps to the global trends that we are seeing. So for example, people living longer, right? Advancement in healthcare, in medical science, right? Therefore, people living longer. So I think these are all the key trends that we're seeing. Aging population as well. So from that perspective, while there are differences, there are also commonality. And the commonality will be huge protection gap that we continue to need to serve the community. We look at saving, right? Savings for the individuals as well as their families' needs. So it's not just the protection and health, but it's also the financial well-being and the savings for the long term as well. Specifically, starting off with Singapore. Singapore went through a very, very resilient and strong performance in the COVID period, so the preceding 3 years. Last year, 2023, there was a slight softening of the entire market here in Singapore, and I think the result, that was a result of a rapid increase in interest rates as well as inflation. Not dissimilar to what we see in other markets, but here specifically in Singapore, we saw the entire industry soften quite quickly, especially in the first half of last year. Down at the industry level, it was about 16.9% throughout the entire life insurance industry. However, we saw a very quick rebound in the second half of last year and saw very strong quarter-on-quarter growth. So specifically for Prudential Singapore, that was what our experience was. And we saw a quick pivot by our distributors, mainly our bank partners as well as our insurance financial consultants, looking at really rapidly growing the regular premium business. At the same time, protection and health business, which has always been the core focus of Prudential Singapore, being one of the very key shield players here in town as well. And also a pivot towards ILP, investment-linked policies. So that also responded to the demands of the customer. So that pivot helped us really see a very solid rebound, and we continue to see that kind of momentum carrying into this year. Of course, last year again, right, at the economic level for the country, Singapore, we saw a very soft GDP. And with the forecasted GDP for 2024 this year, which is going to be higher than last year, I think we definitely can see the economic activities being more robust compared to a year back. Over to Thailand. Thailand, we continue to run a very strong business. We've been there, like I mentioned, almost 30 years. Our business model is predicated on serving our customers primarily through the bancassurance channel. And traditionally, we had two very strong bank partners that we work with, the TTB Bank as well as UOB Thailand Bank. So these two have been our anchor channel, and we continue to really push out health, protection, saving solutions to the customer base through the branch network and through their customer base, so to speak. We also work that through our very niche agency force as well. So that has been the business model. So last year, generally, overall 2023 was a good year for Thailand, and we continue to maintain our number 3 position in the bancassurance market. And happy to report that our local team has really done really well, and we now have also signed up our 3rd banking partner. So that is also from a company perspective.
Which happens to be?
Which happen to be CIMB Thailand.
Okay.
Yeah, so that helps us diversify our overall approach from a bancassurance perspective. So having another new player in there. That gives us access to close to almost 2 more million customers through their 54 branch network as well. So that's something that going into 2024, we're really excited for the new opportunities as we continue to build that business. And finally, over to Vietnam. Vietnam again has been a fast-growing market with huge potential. with huge protection and savings needs as well. And we saw that growth in the past many years. However, unfortunately, last year we saw the entire softening of the market at the industry level, at the country level, and also a reduced consumer confidence. So that has been the case. So in short, while the market kind of reduced overall, we reduced a lot slower compared to the average in the market. And in fact, we even grew market share and are now the market number 1 player in the Vietnam insurance market. The key focus for us now going into this year is to continue to partner the regulators, because the key thing is to really lift the overall standards of the industry. I think in the COVID years, and then now, of course, so-called post-COVID, there are key lessons and key trends, right? COVID it feels like so long ago, but actually it's also not that long ago. It's only in the recent years, right? But what that experience taught all of us is actually the importance of protection. People wanted to protect themselves. People wanted to protect their families. People were beginning to really look at their financial planning, look at their protection plan, right? Take it out, dust it off, and I think that was a very good learning, good outcome. Of course, I hope that we will not need another pandemic of this kind of nature to really remind everyone. But so in short, I think that was the key learning then, and we continue to see that behavior happening. So therefore, as a business, we will continue to respond to the market's needs, the community's needs in terms of protection, in terms of healthcare, health insurance needs. Right. So these would need continuous innovation in products, innovation, not just products, but services as well, to better serve the families. Second one is post-COVID, right? Immediately post-COVID, we started seeing some of the things happening in the world. A bit unfortunate, but these are the realities. We saw geopolitical tensions. We saw the very unfortunate Ukraine-Russia war. We saw supply chains being disrupted. We saw rapid rise in interest rates. We saw fairly high inflation. So that whole mega trend, in short, I think to distill it down, the importance therefore to the consumer, to the public, is actually the importance of financial planning. Because you can't really predict when these things will happen and all that. So the best thing to help ourselves and our families is to do proper, disciplined financial planning. As a life insurance company, our solutions and the partnership that we want to establish with our stakeholders as well as our policyholders is one that is of a very long-term in nature, right? So not short-term, not tactical, not just for the 1 year, 3 years, or 5 years. We really want a very long-term relationship. And in that regard, I think, again, based on the depth of the market or the regulations and how each country function is at different stages, right? So, and of course, there are clear key learnings. So from that perspective, be it a platform play, be it a SG Findex, for example, in a more mature scenario like in Singapore, we see the benefits of it. We see the customers really logging in, really one touch of the button from that perspective, having that consolidated view. And that helps us as we continue to manage those conversations with them in financial planning, not just having a sliced view, but a holistic view. And that is very, very powerful. We see the beauty of taking insurance or / health and technology and putting these two together to better serve our customers. So some key examples will be, say your health insurance, right? Health insurance that the customers purchase, and then there will be a yearly premium that will be payable. So we employ AI TalkBot. Right. AI TalkBot in a very friendly way to remind the customers in terms of the premium payment. It really understands the empathy, understanding the tone of the customers, and then speaking in the local a local language, so to speak, right? So this helps us in making sure that our customers continue to be protected, right? Because if the policy is lapsed or is cancelled, then that is going to be something that's untoward to the policyholder or the family. So this is one example of using in the health area together with technology. Another key thing that we have seen is actually telemedical services that we provide.
Right.
Beyond just the telemedicine, but this is also using the tele platform to really do health examination. Right? Traditionally, some cases will require our applicants or policyholders to go see a doctor. From what we see in the data, some may take 2 to 4 weeks, right? Depending again on the availability of the policyholder themselves or with the medical provider, right? To fix an appointment. And even when they go there, they may be subject to some wait time, and the actual session may take, right? Again, depending, right? Half an hour, 1 hour or beyond. So what we have done is actually understanding the customer's pain point and the feedback and looking at technology that's available. So in short, we deployed this on a tele basis. So from a tele perspective, our applicants can go through that. So in the comfort of, say, their home or their offices, right? Then the doctor will be seeing them via the tele. So the time is compressed, is fast, is convenient, there's no wait time, and the entire process is fast. Thereafter, we as a company will get those records or get those confirmation from the medical provider, and then we can then process on the entire transaction. There are differences, but at the same time, there are also similarities. So if you reference, consumer banking, wealth management, right? So I equate that and insurance being quite similar. The overlap is actually very, very large in the sense of both models, in my mind, it uses a large sales force in terms of number of people to serve a large customer base with financial solutions and undergirded by digital capabilities. So these 4 things, right? Large customer base, large sales force, financial solutions, digital, is pervasive in the consumer banking space as well as the insurance space. However, your other point earlier that you mentioned is also true, because traditionally for insurance, if it's, for example, specifically done more through agency in the past, then those touches with the customer may be only that few times a year. Whereas compared to a bank, right? Because banking, and again, right, with technology, with the different services, there are more touches with the bank in the sense of your savings checking account, your pay now, your credit card transaction, payments is literally daily in that sense. But however, from an insurance company perspective, for Prudential in specific, we are also moving and using, let's say, a very important area, health insurance, healthcare needs, right, of the customer base. That is fast changing, right? And we are also changing our thinking in terms of, in the past, just being a payer, right? That means if the client in the past just bought a health insurance with us, and then it's touch wood, but it's only at the untoward circumstance, right? Maybe when they fall sick, get hospitalized on that, then they will activate the policy and then submit a claim. But that is fast changing for us because we are seeing now with progress of technology and in the digital space that we want to move from just being a payer to being a partner with our policyholders. And how we do that is through connected care. How we do that is through adding a lot more value to the policyholder instead of just purely in those unfortunate situations, then it's just paying. So partnering you with your health journey throughout. And that gives us a lot more opportunities to touch base, to communicate, to engage our policyholders. So in that sense, that is fast changing. Maybe not as instant as down to every second of payment like a banking system, but definitely compared to a very traditional insurance approach of just selling and then after that maybe a yearly review or only during claims, right? At demise of a family or accidents or disability, right? Very untoward situation. We now have a lot more touches because, again, from payer to being a partner. traditionally, right, as an insurance company, for applications that come in, obviously we will then go through one additional step, which you may not really see, say, in other parts of the banking or the financial services industry, right? So for us, uniquely in insurance, we need to do underwriting. So that could be time-consuming, laborious in the past. Not so now. So for example, in Prudential Singapore, up to 75% of our cases that come through, the business that comes through, goes through what we call auto underwriting. That means automatic underwriting. That means the whole engine, the whole parameter, leveraging on technology that has been built and refined over the recent years to a space now whereby 75% is auto underwritten. Auto underwriting means the benefit to you is to the advisor, they get an instant. Instant, they will know whether after this auto underwriting case is to be incepted or not, right, or to be rejected. So that gives our frontline advisors information faster. It also then gives peace of mind and also faster response to the applicant. And not only just the application, once it's approved, within a couple of hours, you get all your e-policy, right? In the past, it's very thick, it's complex and all that. You get it snail mail. So you cut down from a customer experience. In the past, it's days. Now it's literally minutes or a couple of hours, depending on the complexity. So I think these are some of the beauty of, again, harnessing technology to do all these things that is quite complex behind the scenes, right? From an underwriting process to make it now as seamless and as convenient to all the stakeholders. I think technology, of course, is a very broad, right, word, but in specific, I would say data, analytics, AI, right, machine learning, these fields will continue to gather pace very quickly. So the changes that come, right, the nimbleness that companies need to be, right, to harness that, and of course to understand the risk, and then how do we manage that? Because it needs also that accuracy, the assurance to the public, to the individuals concerned, to the individual policy holders. And we as a company, we want to get that right 100% of the time as well. But yet that is a fast-growing space. So I see, back to your point, I think that is the fast-growing trend, and we are riding that trend. So it's important that our employees, our fellow colleagues, really understand AI. That's why we are rolling out different programs, right? Machine learning. Even I myself also went through that, right? To make sure that we want to support and enable our workforce to really understand these new things, and then how does it apply to their individual jobs. So clearly, insurance, we are in it for the long haul. Very, very long-term relationship, as we talked about earlier. And it's important that we safeguard the interests of our policyholders, not just for the here and now, but for a long-term perspective. So while we harness the power of digital technology for business generation, for sales, for servicing, at the same time, we are also harnessing all of that from a risk management perspective, right? Because ultimately, what is insurance? Insurance is all about risk management. So we continue to harness the best of what technology brings to us and to the world, to be able to use that for detection purposes, right? For all the different processes at the back end that we do. So happy to say that in Singapore, this is a definitely evolving space, but this is something that we continuously focus on. And the retention rate, the persistency of not just us, but as an industry here in Singapore for life insurance is extremely high. And with the fraud and those kind of untoward incidents being very, very low and minimal. I'm personally very proud and honored to be associated with a company that I work in that is so deep in this area. So specifically for Prudential Singapore, the Singapore team already 6 to almost 7 years ago already have had a head of sustainability and the team focusing in this area. Right? We have also recently published our fifth voluntarily published annual sustainability report. So that is the kind of maturity here locally in Singapore. But now from a group perspective, likewise, right, Prudential Group is very, very focused on sustainability. So in specific, some of the things that we've been doing are a few folds, right? One, clearly making sure that health and financial protection is accessible to the community and to our customers. And we do that through many, many different ways, right? So the COVID period, like we talked about earlier, COVID period of us coming out with bite-sized products, making it accessible to people, or COVID-related products back then. In Singapore, right, dengue, seasonality, right? So again, we have a bite-sized micro-insurance for dengue, things like that, to make it very simple and accessible to people, right? So that's one example. We have also launched ESG, climate, right, global impact kind of ESG-themed products as well to the marketplace. So that's another thing that we make it easy and accessible. Absolutely. We see micro-insurance, right, it's not just here in Singapore, but in the recent years, and probably, arguably, I would say even more pervasive in the emerging markets because the reach is just amazing, right? I mean, Singapore here, yes, right, it's a very, it's more affluent market, right? It's more established. So average ticket tends to be higher. But in those populous countries, the bite size, the simple, easy access to insurance, that kind of platform is very important. So we continue to see that as well. But earlier to your point, other than just supporting the whole ESG and sustainability agenda with customer-facing products, that's one. But importantly, what we do is also responsible investment. And that, to me, in the short term, my personal view is that will have an even greater impact. What do I mean by that, right? So as an insurance company, we obviously manufacture solutions and we avail that. When the clients take on those policies for protection, whole life policies, or even for wealth and investment purposes, the monies that we collect, not the millions, but not just the billions, but the tens of billions of dollars that we collect, we would then invest in those. So imagine if now that we have a very strong ESG sustainability lens over that gives us a very, very quick and of course we are responsible and we want to use that platform focusing on responsible investments to really do good from that perspective. So maybe a couple of examples of what we have done. As a company, regionally, what we have done is we have divested from companies, that means the investments, we have divested from companies that derive more than 30% of their income from coal. So that's one key step. The other one is to really continuously focus on what the industry calls the WACI, weighted average carbon intensity. So we have committed to reducing 55% of the WACI in our whole investment portfolio, and we are on track to doing that. The 55% target is not a 2050, right? We always say 2050 net zero and all that. Even us as a company, we have pledged that. But the WACI reduction of the 55% is by 2030 in the next few years, and we are already on track to achieving that. So these are some of the examples of us being a responsible investor, so to speak. And final point is that, of course, then the rest of it is sustainable business internally, right? So working with our workforce to make sure that we support them in their daily work to understand the environmental impact, the workplace and health, safety, health in the workplace, in the work office environment. So these are all the different things that we've been supporting towards the sustainability agenda. I get asked this question a lot, right? So it's always the banking, why did I move from banking to insurance? My real story is this, right? So it's lesser of banking to insurance. My own personal story is more of already semi-insurance, why don't I go full-time insurance? Because when I first joined so-called banking, my first job after school was actually insurance. I was doing insurance work, but in the banking environment. I was an insurance product manager. Then in the early 2000s in Singapore, right, when the high net worth insurance space was fast taking off, I was part of the front line. I was working at the front, working with my sales colleagues, my service colleagues, to really help Singaporeans, to really help individuals and families, affluent segment, right, and the high net worth segment, to really embed insurance very, very strongly into their whole financial planning. And of course, then in my last 10 years in my previous company, whereby it was a banking group that owns an insurance company, I saw how insurance was kind of managed as a holistic business and how it will impact people. So therein lies my story. So it's lesser of banking to insurance, but I was in insurance work. I have now decided to dedicate the final chapter, so to speak, of my career to be very focused in really helping individuals and families and really focusing in this very deep insurance vertical, as opposed to banking previously was great, doing some insurance work, but it's more breadth. So this is my commitment to really using insurance to better serve the community. Of course, there's one thing that is a bit different in the insurance industry compared to pure banking or consumer banking, is the relentless focus on protection and health, right? So that is more, I see that doing a lot more in this space, and that's the opportunity to work with our banking partners, right? Yep. And ecosystem partners alike to really further that agenda. Ultimately, this is also a national agenda, right? So the healthcare, the rising healthcare costs and the inflation, how do we kind of address some of these things, right? And these are very real, not just in Singapore, but we see it in the region, and it is also a global trend. So I think that's some of the things that I'm seeing happening, and that is purposeful and meaningful for us to tackle. That's how I feel that as a business, we can then have the maximum positive impact on the community that we serve.